What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Thursday, March 28th. Alright guys, Nvidia stock here today down $23.11 per share. That's minus 2.5% in regular trading hours. It's down a couple more bucks in the after hours. But listen, as always, you know, we have to take that after hours movement with a grain of salt because the volume is so ridiculously low. Let's get started here and try to pull out as much bias as we possibly can that the market gave us here today on this second red day. We'll check out the volume profile, the psychological levels, the bias coming out of the options chain, and the expected move. Let's take a look starting with our daily ritual, the volume profile analysis here on the 5-minute chart. Listen, if you have not done so already, please subscribe to the channel. I greatly appreciate it. Helps out tremendously for me to keep covering Nvidia and all the other stocks I cover every single day. So let's take a look here. The moves that I'm primarily interested in here today are that dump that we got off the open, and then that fade and pop that we got into the close. That's really all I care about today. The rest was not very obvious movement and very contextual volume in the majority of what is not circled. So let's take a look here. Very obvious contextual open. We got that higher volume opening bar and fade. Listen, there is, as we came in to this intraday low, there is what I would have to call a little bit of bearish bias in this portion of the volume profile, even though it's only two consecutive higher volume bars compared to, you know, the volume bars around there. You know, it's enough out of context for me to back off of that need to have 3-4 consecutive bars because we got to pop. But understand, everybody, I think it's really important to really get this. This really high volume bar, that was the intraday low, and we have wicks. Okay, relatively large wicks, which tells me that was a battle bar. All right, this isn't just hard selling volume. This is a buildup of buying and selling volume. The candle, of course, was red, but those wicks tell us that the bulls are putting up a fight, and the intraday low, the volume on that bar is typically going to be a little bit bigger. So there is a bit of an explanation for that, but still, I have to say, just to remain unbiased, there is a little bit of bearish bias. Small, but it's there. And by the way, remember, for those of you who are maybe new here, the volume profile is like peeling back a layer of the onion, right? It doesn't, like some of you might look at this and say, well, there's obviously bearish bias, the stock went down. Well, price action and the volume profile, we're looking at the volume profile because there are oftentimes things in there that we can't read from the price action. Like, it's not uncommon to see a move like this with no bias at all in the volume profile, or if there were a couple more green candles to actually get a sample size, you know, you might even see a bullish bias fighting against a bearish move. It's kind of bizarre, but we have to look at it because that is often the case. Tells a completely different story, gives us a different understanding of what really happened. Now, heading into the close, we got this fade and pop. This is a very normal taper upside in terms of volume into the close. That's very normal. There's nothing out of context there. This one bar here, again, that's the first bar after the closing bell, and we've seen this a lot lately. It's my belief that that's rebalancing, right? Funds and institutions, the algorithms trigger after the bell. It's very common, and it never actually, well, I shouldn't never say never. It doesn't commonly lead to a ton of price movement because you're typically seeing a lot of buying and selling. So the candle ends up being relatively small, while the volume very often ends up being very large, one of the biggest of the day. We've been seeing this like nearly every day lately on Nvidia and quite a few other blue chips. Now let's move on and get a good understanding of the psychological levels that I'm going to be paying very close attention to here come tomorrow. Listen, today we gave up the 200 period here on the 30-minute chart. We are getting this crossover, the 50 period and the 200 period. I don't care about the crossover itself. Death cross, you know, golden cross, whatever. It's all overhyped in my opinion. The only reason I care is because that 50 period, now that it's crossing over, you know, of course, it's a quicker moving average than the 200. Now, being the quicker moving average, you can look at this a couple of ways. You know, bears are going to look at this and say, you know, I want that 50 period getting as low as possible, as quickly as possible, to add another barrier back to the upside and help hold the stock down, ideally below $900 a share, right? Bulls, there's two ways to look at this. Okay, I have to lay out both ways. The first way is that, really you'd want to see that 50 period flatten out to give us some breathing room to make an upside move back toward the 50 period and then eventually reclaim maybe both of these in a single day just to improve the psychology surrounding the ever so popular 30-minute chart. But that's assuming that you think the stock is a little bit weak currently. If you're looking at Nvidia, and we'll pull out some bias in the option chain to help us determine how we feel about this. But if you're looking at Nvidia right now and you're like, I think the stock is actually pretty strong, even though it's been, red for a couple of days, I think it won't take much to see an upside move. If that's what you're saying about Nvidia right now, then honestly, guys, I don't think it's such a horrendous thing to see the 50 period curling downside at an even more aggressive rate. Because if the stock itself can be strong enough to not get pushed down by that one psychological factor, then this coming downside just makes it easier for the stock to reclaim it more quickly because it's closer to the stock price, right? So you have to look at this and decide, what do you have more faith in? The $900 level or the 50 period? That psychology surrounding the 50 period on just the one chart, the 30-minute. Well, if you have more faith in the 50 period and we end up seeing it really aggressively curl downside, well, then you're likely a bear, okay? And if you have a lot of more faith in the $900 level and you're like, listen, that 50 period, whatever, come down toward the stock price, we'll reclaim it easily once we get a little bit of a bounce here on decent volume, well, then you're primarily focused on $900 a share and you're likely a bull. Now, let's move on and see if there's anything worth looking at on the 4-hour, and man, this thing is in play. Let's take a look. All right, that 50 period on the 4-hour chart, we gave that up here today. Currently sitting at about 908, 909, all right, on the 4-hour. And the stock is just below, in the after hours, just below $900 a share. We'll talk about that on the daily. It's a lot to talk about there. But listen, just really simple here on the 4-hour in particular, specific to this exact chart, bears. A retest of that 50 period and a rejection, I think is likely necessary to really try to discourage bulls, because bears, you have to understand that there's a lot of bulls looking at this specific chart right now and saying, it's a day one break on a slightly longer term time frame chart, the 4-hour, right? It's not the 5-minute, right? And I want to see a retest and actually prove that we're going to see this thing as resistance, because we truthfully haven't really tested it. So bears, the best way I think to discourage as many bulls as possible on the 4-hour is to retest the 50 period and reject on big volume. That'll quiet down the bulls, at least in the very short term. Bulls, it's a day one break, right? Same logic. When we start getting to the 4-hour and especially the daily, breaks of levels like these, I prefer to see a little bit more confirmation. I've just seen false breaks way too many times. I need to also see the second half of that statement. I need to see a break and hold. Okay, now in this case, whether that's the 50 period curling over on the 4-hour chart, getting below $900 before a retest, fine. Bears, that would be a good scenario for you guys. All right, but bulls, we are where we are currently. A reclaim of that 50 period in the next couple of days, holding above $900 a share, the 50 period that is, holding above $900 a share, not curling downside below that, just reclaiming that, now you have two psychological barriers between the stock and the stock being an $800-something stock again, right, like it currently is. This can be fixed in a matter of minutes. Given Nvidia's volatility as of late. But in the same way that, I think the bears want to see some actual confirmation, because we didn't really see that yet. Bulls, a break and hold, I would ideally want to see the break on high volume, a retest on low volume, small sample size, betting on that retest actually breaking, right? And then the volume pouring back in and the stock pulling upside away, bouncing, saying, okay, this 50 period on the 4-hour is a short-term support level. Now the daily chart. All right, this is the real story. Well, it's all the real story, but this is what I think is the most crucial story, the one that has the most eyeballs. Listen, guys, that channel from 850 to 9, that thing for over a week was a real pain, okay? If I'm a bull, bears, you're going to have to go through regardless. So bears, your real target is getting below 850 because that gets you out of that channel to the downside. This is like the sludge. The 850 to 9, that's the sludge that you just have to go through to get to the other side if you're a bear. But bulls, you really don't want to end up in the sludge at all, which means this is kind of like the last shot to do so. Again, very, very short term, just talking about this channel. Holding 900 avoids that entirely. Okay, tomorrow. And I suppose, well, next week, because tomorrow's the last trading day of the week, don't forget. But a hold and a pull away, putting some distance between the stock price and 9 to the upside, of course, on high volume, maybe slightly above average, as much as possible, really. That would be a beautiful thing to see heading into the end of the week, into a long weekend. Okay, that would show, at least me, from a small sample size of one single day, that shows that traders are comfy holding the thing over a 3-day weekend. You know, which a lot of times, we really start to get transparent on a day like tomorrow, Thursday, heading into a 3-day weekend, when, like, I mean, this sounds so stereotypical, but the reality is, like, if big money doesn't want to spend their 3-day weekend when they're golfing thinking about their Nvidia position, I mean, they can just liquidate it because they're probably green on it, right? Or at least take some profits and do some trimming. So especially on a day like tomorrow, if Nvidia can hold $900 a share strong on big volume and put some distance in between, that is a power move. Bears, you just want to fade 9 as easily as possible, as swiftly as possible, and ideally on any volume except for very low volume. Okay? But bulls, tomorrow, it's time to go. 9 needs to hold. All right? All right, now let's take a look here, because we have an expiration date tomorrow, March 28th. That's, tomorrow at the close. The expected move by the close tomorrow is plus or minus $19.52 a share. So, this is, again, the expected move. That's a technical term. This is priced from the implied volatility of each expiration date. That quite literally tells us, right, plus or minus 1950. This is the expected volatility. There's no directional bias in expected move. That's why we do the analysis and the volume profile, and that's why we look at the options bias. But the options traders, by close tomorrow, expect Nvidia to be as low as like 883, okay? Or as high as like 921. All right, that's the expectation. That's like the one standard deviation expected move. Now, what's the bias from those same options traders? Well, if we take a look, 1.86 million approximately total contracts traded today. 1.15 million of those were calls. 709,000 of those approximately were puts. So, it's not double, it's not triple, but we are seeing a call side bias on the overall ratio. But take a look at this. This is more than double. That 0 to 20 delta range, the short-term bets, those short-term speculators, 536,000 calls, 233,000 puts out of those short-term speculators. Listen, guys, if you enjoy this data every day, I think you'll really enjoy the unusual options activity tier of the Roensch Capital Gold server. That link in the pinned comment, that'll let you get grandfathered in at the current rate. You'll be immune to future price raises. The price does go up over time. But with that particular UOA tier, you also get access to my daily personal scalp setup alerts, in-play stock alerts, my swing trade setup alerts as they come. And then, of course, the next tier up from there is my Platinum one-on-one group that I'm working with each and every day. Listen, hope to see you join for tomorrow's trading day. Again, if you got value out of this video, please subscribe to the channel. Maybe leave a like. It all helps out, tremendously, more than you know. I appreciate you, and I'll see you in the next one.